Explaining common accounting terms, part 2. Hey guys, we are back to explain some more accounting terms for you. If you didn't get a chance to check out our first video, take a look at our page where we cover what accountants mean when they talk about payables, receivables, assets, liabilities, balance sheet, cash flow, forecasts, and dividends. First up in this second video is dividends. Now, you might have heard the word dividend a lot, but won't necessarily know what this means. It's actually a lot simpler than people realize. A dividend is simply a payment out of the company's profits to its shareholders. Most business owners will pay themselves with a combination of salary and dividends, as this is the most tax efficient. Director's loans. If you need to borrow money from your business, this would be called a director's loan. It is exactly the same as any other loan, money that you have taken from your company that you will eventually have to repay. Gross profit. This is a term which can often be confusing for people, but it's actually very simple. Gross profit is the total amount of money your business has brought in, minus the cost of any expenses directly related to what you have sold. For example, if you sell t-shirts for £20 and they cost you £5 to make, your gross profit would be £15. Net profit. Net profit is your profit after all your expenses and taxes are paid. Basically, the net profit is the money that you can keep for yourself or reinvest into your business. For example, for the t-shirts you sell for £20, if you spent £5 to make it and £5 on advertising costs, then the net profit would be £10. Thank you for watching part 2. We hope that you feel more confident with these accounting terms now. If there are any others that you are unsure of, make sure to comment below.